Hey everyone, PayPal and SoFi Technologies recently updated investors with their quarterly earnings release. Some investors are considering both of these financial services stocks and trying to decide which one is the better stock to buy. I'll compare these two in this video. I'll look at their latest quarterly earnings results. Then I'll look longer term on their revenue and profit performance. And finally, I'll compare the two on their valuation. And then I'll answer which one I think is the better stock to buy today. So let's get started with the most recent quarter results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so PayPal's newly installed CEO Alex Chris said that 2024 remains a transition year and we are focused on execution, driving key strategic initiatives, realizing cost savings, and reinvesting appropriately to position the company for high quality, profitable growth in the future. And I'm surprised that we haven't heard more cost cutting initiatives out of PayPal. Initially, a couple of months ago, they did announce a job cutting program on a smaller scale than I was expecting, but still a improvement going forward as I felt there was room for efficiencies to be had. Now, in the latest quarter, PayPal increased revenue by 9% to 7.7 billion and operating income increased 17% to 1.2 billion. The company's performance is improving as consumer behavior is normalizing. The coronavirus pandemic caused unprecedented shifts in consumer behavior. First, people were staying home more often, spending money online on things, and that was great news for PayPal. Then, with the economic reopening, people started spending away from home, spending time and money away from home. And that's bad for PayPal because they don't really have any competitive advantage when you're spending money away from home. It's more convenient to maybe use your credit cards or debit cards or just use your Apple Pay, whatever. That's all more convenient versus if you're shopping online, then if the merchant accepts PayPal, then it's more convenient. You just one click and you're into your PayPal and you can pay and you don't have to take out your credit card and enter the information. And so that's where PayPal has an advantage. And so now that people have kind of gotten through their pent up demand for away from home experiences and they're normalizing their behavior, a normal mix between at home and away from home behavior, and that's good news for PayPal. And not only did their revenue and operating profit increase, but they also finally increased their number of active accounts. They added 2 million active accounts in the most recent quarter, and that increased their total number to 427 million. They had been on a terrible streak for 4 or 5 straight quarters where they were losing active accounts. And in the most recent quarter, they turned it around and made it positive. So that was great news for PayPal. Now, for SoFi, the big story has been the shift to profitability. This is now their second straight quarter where they were profitable on the bottom line. And Anthony Noto, the CEO of SoFi, said that their first quarter was an exceptionally strong start to the year, demonstrating significant momentum as they responsibly grow revenue and diversify towards our financial services and tech platform segments, sustain profitability, reinforce the balance sheet, and grow their member base. Now, this is the area that SoFi stock investors want SoFi to go towards. They like to feel that SoFi is a financial technology company rather than thinking of SoFi like a bank. And the primary reason why SoFi stock investors want to believe that is because fintech companies command a higher valuation than banks do. Right? Banks trade at forward price to earnings ratio around 10, 12, maybe 15 at the highest. But financial technology companies can trade at forward price to earnings ratios of much higher, 20, 30, 40, 50, even 60. So that's why they want SoFi to be valued like a financial technology company, not unlike the way Tesla stock investors want Tesla to be valued like an artificial intelligence company and not a car company, because AI companies command higher valuations. Still, the majority of the company's revenue and profits come from the banking side of the business. In fact, the financial services and the tech platform they're investing aggressively in and may not be profitable every single quarter, whereas the bank side of the business, it's already strongly profitable, and they've been doing a good job on that side of the business, frankly. And I like management decision in 2024 to be more conservative with their lending, suggesting that they're taking a cautious approach as the economy worldwide perhaps slows down in 2024. So I like their strategy there, and they're gaining great traction in terms of the other side of the business, right? Because they've now added all the way up to 8.1 million members. So they're growing their member base aggressively. Customers are demonstrating they like SoFi's app and website and services. And so it's all coming together very nicely for SoFi as they build out this business and diversify away from the bank, and they're trying to move more towards financial services and tech. But as of right now, it's still primarily a bank. And then the financial services and tech platform, I believe combined, they were representing about 54 and 42% of consolidated adjusted net revenue. I mentioned that they were profitable on the bottom line, 22.5 million in net income in the most recent quarter. That was up from negative 44 million in the same quarter the prior year. That's the second straight quarter they're profitable on the bottom line, and management has very optimistic earnings per share forecasts for the next several years. They feel confident that this is only the beginning of their profit expansion. Now, longer term, looking at their revenue growth, you can see the revenue growth decelerating for SoFi. It was growing at much faster rates, and now it's down to 24.07% in the most recent quarter. Still, it's growing much faster than PayPal, which only grew at 9.3% in the most recent quarter. Looking at net income on a trailing 12-month period, PayPal has done a better job expanding its profitability since July of 2022, increasing trailing 12-month net income from 2 billion all the way up to 4.339 billion, whereas SoFi Technologies still negative 178 million. Now, this is on a trailing 12-month period. If we look forward 2 quarters from now, SoFi's net income trailing 12-month is going to be very positive. It's not going to be negative anymore because they're going to have 4 straight quarters of positive net income. And so if you look at it on a 4-quarter basis, it's going to be strongly positive. But for now, it's still negative. And then finally, I wanted to compare their valuations. SoFi is trading at a forward price to earnings of 37.6, whereas PayPal is trading at a forward price to earnings of 14. I do think SoFi Technologies deserves a premium valuation over SoFi deserves a premium valuation over PayPal, but I think this much of a premium is overdone. SoFi will grow its revenue and profitability faster than PayPal will over the next 2 years, I will say. But I don't know if SoFi will grow their revenue and profitability at more than twice the rate that PayPal will over the next several years. And so looking at the big valuation difference, I would say if I had to pick one of these 2 stocks to buy today, I would pick PayPal. But I have both of these stocks rated as a buy, so you don't have to pick just one. If you were thinking about, let's say, investing $100 and trying to pick between these 2, you can just split that up and say $50 in PayPal and $50 in SoFi if you so choose. But if you wanted to pick only the better one, I would say PayPal is the better risk versus reward given the current valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.